Welcome to TradeDMBI.com. This is Jonas Reports for the 27th of February. Well, the market did exactly as we expected. We knew that if we came back to the 50%, it wasn't going to hold. That 4,008 was the resistance point. MBI White was clearly in the lead, but there was an attempt for Magenta had potential to not only just make the crossover, but really come out strong. But this dip below the red line on the extreme histograms had not improved, and that's a straight up negative. Same with the shakeout, straight underwater. So the short term buyers minimized it. But as we were talking about, the NASDAQ was likely to be the hold on this, and their retreat to the 50% would take us to the 38, which is exactly what I said yesterday in the video report. So that turned out to be that. Got support off of that 38%, led up. I did add the little white line. This is the open of the beginning of the year, just so that that's something that visually you can see relative to where we are after just a couple of months. Still on the positive side, so I guess that's a plus for some people. But there it is from the NQ. We talked about this, the breakdown to the 50%. Now, it still hasn't changed, but short-term buyers, strong move to the upside. However, I'm watching that orange because if that begins to make a pivot up, it wasn't a strong pivot up, but if it really begins to turn around before steel, and if steel rejects to the downside, I think that you would see definitely a break of that 50% mark on the Nasdaq, and that could really cascade from an S&P standpoint. So far, all this has been relatively modest. Um, Bond market, well, there we go. That's always interesting when that happens. Uh, Bond market, well, it continues to recognize that rates are going to continue to rise, that the Fed isn't backing down from this attempted inflation fight, and they really don't have much of an alternative. The big issue is the rising deficits becoming untenable very quickly, and the question is, how much is that sustainable? Obviously, they can continue to print indefinitely, but is going to drive inflation, and it's a vicious cycle that just ends with ever exploited deficits as well as interest rates, and everyone else in the world pays for it. Now, ideally, you want to keep the dollar rising and oil slightly higher because that will at least drain some of this liquidity, reducing purchasing power. They're just relative versions of pain for different classes of the economy, and that's the only recipe, unless you're willing to tighten the reins on the deficit spending in order to reduce the inflation to be able to lower its overall interest charges. Blah 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 blah. It's just a vicious cycle that isn't going to end, and it ultimately leads to what we're seeing around the world, which is this strong push towards trying to find alternative trade outside of the U.S. dollar, and that's what you're literally living through. So get used to it. It's only going to get worse. I mean, there's no accommodation for it, which makes interesting things when you read headlines where China's buying outrageous amounts of gold, Russia's buying tons of gold, and yet gold prices continue to fall. And that's simply because it's a security that is tradable and shortable without actually having the real material. If that didn't exist, you definitely would see that much higher. And while it all sounds nice, obviously you see a situation with the euro and that, but their economies were worse. You had the same with the Bank of England as well as the Eurozone having their difficulties with debt explosions and the unwillingness of anyone to want that debt. And so there's going to continue to be a capital flight. The question will become, at what point does the U.S. as a capital flight alternative become untenable as well? And that's where things get really interesting, because that begins to cycle things down as purchasing power continues to be eroded. Um, Not like it hasn't been over the last 70 plus years, but at a far more accelerated rate. So worth noting, of course, Bitcoin, we had talked about coming back to that previous support level, which doing it right now, and that just fills back towards the positive extreme. Not unexpected within that. What was interesting to me was the much more modest move from an ETH standpoint. A bit more support there, and that's just because the outside move on Bitcoin was just a little bit more dramatic. And of course, I've been getting the back and forth with the TS again this morning. It was fine just a little bit ago, and then did just that. So, is what I'm dealing with. Anyway, as always, though, I will update you on anything relevant. Trade well. Getting together indicators for next month should be exciting. I think you're going to see a lot more of this volatility that started really start to create some interesting scenarios, and so that's what we'll be looking for going into March. Trade well.